All right, all right, all right. Good morning, everybody. Good morning to you, Johnny.
Hey, man. Good morning to you, Noah.
Thank
Here
you,
we
Johnny. I
go.
really appreciate that. It's a good day. It's crisp.
It's
It's
crisp.
crisp
It was
out
a
there.
it was a lovely weekend though, but the wind yesterday was a cold wind,
It's
so it
windy.
was nice. Don't get me wrong, it was great. The gusts though, wow,
A little
gusty,
windy.
gusty.
A little windy. It is crisp out there. I'm waiting to use that word. But it's Monday. All right, we're getting a little macro Monday, guys. We're gonna get going very, very, very shortly. I'm just messing around, just to let some people in. Just to let some people in. That's all.
You
Give them
know
time.
who
Give them
just
time.
came in is Karen Stone from Park City. Karen,
I
thank you
love
because I think it's 6 a.m. out in Utah, so that's
6 in the
early rise.
morning.
Thank you, Karen, for tuning in that early. Do
I don't think it's
appreciate it.
that early. Where is she? Where is she in
Park
light?
City, Utah,
All right,
Utah.
that's it's not 6
That's
a.m.
another world away, man. That's like
All right, you're
I don't even
exaggerating.
want
You're
to
being
say, but
dramatic.
yeah, it's out there.
We love Karen Stone, but we love all of you guys for joining us. Thank you very much. We love Johnny. We love Johnny Charts over here. Johnny Walkup, thank you so much for joining. I am Noah Rosenblatt. We're both with UrbanDigs, and it is Monday. You guys are going to get a little macro Monday coming right at you. And for those of you that are new to this show, we're going to start out with Manhattan real estate, take a look at what's going on with the trends, and then we're going to go into some macro topics. We'll check in on credit spreads. There's something little going on there, Johnny. We'll check in on Fed funds rates. There's something little going on there, Johnny. Okay. Look at some macro charts, and then we'll
Well,
circle back.
the nice thing about talking about macro is there's pretty much always something going on in macro. Even when there's not, you can just fudge it. Yeah,
That's
look
true.
at this index. There's something happening here.
Yeah, there's always something going on. There's always
Shh,
something to
don't
talk
tell.
about
That's the
in
secret.
macro land. That's all right. No, we're not drama people. So like we'll let you know when something dramatic is worthy. That's why we have credit spread alert to let us know when to get worried, right? Um, and we'll try to do all this in 30 minutes or less, guys. And we'll try to end on Manhattan. None of this stuff is financial advice. Do not start day trading this stuff, as tempting as it is. You know, John's a day trader.
No, I am not.
You were at one
I
point in the
should have.
past.
I should be. I should
Yeah.
be because hey, why not?
All right,
Jump right in.
let's get going. Let's get going, guys. I'm here looking at my market ticker. I got two screens. If you want to look, that's why I'm looking this way. Market ticker, guys. We're looking at supply. This is 30-day, 1 month supply. We are at 1,065. We are supposed to be at 991 to end the month. This should probably just keep going down, right, John? For the next week and a half, 2 weeks,
Yeah, I think
Thanksgiving.
supply reached its peak a couple weeks ago, right, or maybe last week or so, and I think it's just going to start rolling down. It'll stabilize in
Mm-hmm.
January and won't really start creeping up until February slowly, and then it's in March you start seeing the listings start coming in.
Yeah, I could already see these bars are lower than the previous ones right over there. See that right there? So you got that going for you. That'll probably be below. What?
It's I'm always curious because it's like you see these people who list like December 20th, or I'm going to list my place December 29th.
Everyone's got
Who is doing that? Or like the day after Thanksgiving? Like some people list at that time. Now I get it. There's some people that that's just the way the timing works. But like every once in a while, I'm like, well, that's an interesting listing time. So
yeah, sometimes it's forced. Sometimes there's just not a lot of strategy behind it. I mean, if there is, that's not the best strategy. But sometimes it is what it is. I think this is going to go down. 991's our target. That's what we're looking for. Chances are we'll probably be under that by the time November finishes out. So that's what's going on supply. It looks a little lighter than normal. Okay. Contract signed activity 30 days 947. This is down from over 1,000 like a little while ago when we did Friday Day and all that kind of stuff. But this is still a very good print, John. We're supposed to be at 850 for the month of November. So
yeah. No, it's been a strong fall season. We're going to get into it. I've got some thoughts. on the fall season as well as the upcoming spring season. But we surprised to the upside, which was delightful to say the least after a few years of being not surprised and being on the downside.
Yeah, and you can see it right over here. You can see that little pickup, and that's starting to come down right now. It's rolling over a little bit over there, but we're still doing okay. I mean, mortgage rates maybe a big driver for that. Maybe the election passed. Maybe that's a driver. I don't know. Doesn't tell us the why, or the discounts, or how much. Like what kind of deals these people getting? These 947 people.
Yeah, that we have to wait on so we can get that closing price for Acris. Wait for that to come out.
90 days.
But that's like a long time.
Yeah, 3 months, 3 months plus. We'll be dealing with snow when we get price discovery on these deals. So yeah, but that's good. We'll take it. We'll take it. That's supposed to be at 850. Anything over 850 is good seasonality wise. So we got some room. Even if this comes down a little bit, we got room to be above that number. So we will keep an eye on that. All right, we're done. We're done with that. 9. Thank you, Karen, for telling us it's 9 a.m. 6 a.m. John, give me a break. There is a mountain time. Mountain time is a great time. All right, credit spreads. Let's go to credit spreads. Credit spreads are widening a little bit, just a little bit. You can see it's rising over here over the last couple of weeks. We're at stage 2.1 right now. I have told you guys a couple of things with this. First off, you want to wait for 2 moves or more. For those of you that are joining Macro Monday and following us, this was at 1.6, I believe, previously, and now we're at 2.1. So we moved 1 level. Okay, noisy. You want 2 levels for a signal, and here's that widening right over there over the last couple of weeks. The stock market's having a little tiny hiccup, but when you scale out, I'm going to go to 1 year, take a look at where we're at. So it's like, I got a little line over there. We're widening, yes, but I don't know if it's anything strong of a signal just yet, John.
No, look, but look, if you take the most recent point and you take that top point, that the slope from a few weeks ago is really starting to flatten. So it's like that trend is starting to slow down, that decreasing trend. So it's like, are we still in risk on environment? Yeah, but I think there's definitely a little bit of a pause happening here. Maybe not even pause, maybe just kind of like, what's that? That's interesting. Let's investigate that. So look, you got some big numbers that we were on a shutdown. The shutdown's over, which is great. But we have like the September jobs report is actually coming up this week. It's been delayed, so it's like there's going to be some numbers that are all thrown at us. We'll see how the Fed handles those. But there's a lot of stuff out there that's influencing this number. That's making people maybe say maybe we're good here.
I think this right here is correlated with the increase in rates lately. We're going to get over that momentarily. It's correlated with the increase in the markets now thinking we're not going to get a December cut. No more cut in December. I don't know. And some of the AI stocks and some of the crazy stocks have been going nuts. They're getting a little hit. Some of the tech guys, they're getting hit in the last couple of weeks. So I don't know if there's any.
Yeah. Well, I think so first of all, that's a fantastic point, because when you think about what credit spreads are, they are a canary in the coal mine. It's like a warning. The idea is like, hey, there's a safe level of investment. And if you want to have a little bit, if you want to not invest in that, you got to have a little something for that effort. There are 2 parts to that, Noah. There's that mechanical part, which is the spread itself on U.S. Treasuries and safe haven debt. And then there's that emotional spread. So I think we're seeing a rise in the mechanical one simply because the expectations for future Fed meetings have shifted, and we'll get to that in a second. I don't necessarily think we're seeing that emotional part just yet. I think it's that emotional part that goes exponential, and luckily we're not seeing that.
Yeah, and I mentioned stocks because credit spreads are credit spreads and stocks. They're going to go pretty much moving together. And guys, if you take a look, there's really a lot of different things going on with the stock market. Look at that orange line right there. That is the Bloomberg consumer discretionary. Take out Amazon, take out Tesla, take out tech, take out AI kind of a thing. And that's the other 2 lines, tech and AI. And that's like, there's 2 stories, right? And the tech and AI has been powering this whole thing for a long time. And that trade's starting to roll over a little bit. You could see it. You could see it in the last week and a half, couple of weeks. If you're invested in them, you probably feel it. And again, that's correlated with this little up move going on right over here. So that's what I'm talking about.
That's really interesting because you think when those lines move in parallel, the orange line, the consumer discretionary moves in parallel with the Mag 7, the Amazon, like the technology lines. Like you can flip flop from one to the other and the market will stay fine. If the consumer discretionary is essentially flat and it's the tech stocks that are powering everything, a little bit of rotation out of those is going to really pull that market down. I think that's what we saw over the last week, just a little bit of rotation out, a little bit of flight to safety, and it really sort of, caught people off guard. I don't even say caught people off guard because they knew what they were doing. But, if you're watching from the sidelines, like, wow, that was a little dip.
Yeah. And I'll continue to say, if there's any bubble anywhere in this whole thing, it's got to be with the AI, the build out, the data centers, the power thing, the all that stuff. It seems very, very much like the internet and building out the fiber optic capacity and that whole thing. It just, I don't know why, it just feels that way. We might have some bubbles pop and not notice it in other things, kind of thing, because it's so concentrated. But whatever, doesn't matter.
So just not to belabor the point, but we have NVIDIA coming out with earnings this week, I think on Wednesday, if I'm right. So that's going to be an interesting idea because NVIDIA is the one that makes those chips. And if there's still that hunger and demand for chips, even if it's out, especially if it's outside of the core, like the Googles and the Microsoft, the OpenAIs that are buying those chips, if we're starting to see that demand from other places, like I think there's talk that, the Mideast wants to build massive data centers of their own, like that could keep this rally going for a lot longer. So,
we'll see.
Data dependent, Noah. That's how we.
I know it's going to be interesting. It's going to be interesting this cycle around. I'm just looking at it. I'm looking at it with .com eyes for some reason, and great financial crisis eyes. I'm looking at it. It's nothing like, by the way, absolutely nothing like that. I'll tell you that much. All right, let's pivot. Rates, guys. Fed Fund Futures says so right over there. You guys can do this yourself. I'm at the CME group, FedWatch. That's what it's called. And this is basically the Fed Fund Futures table. Look at the left. Look at the left side here. There's meeting dates. That's the future. Okay, back to the future, right? DeLorean, 88, future. Okay, we are here. That's where we are. Last time we did this, I believe it was last time, there was a rate cut in December. It was blue, and that was a 25 quarter point cut. It's not there anymore, John. He gone. No. He gone.
Yeah.
No cut.
Yeah. It started out, we've been talking about the December rate cut, back in August, September. We were looking at this. This is one of the ones we were penciling in, and it was up there. It was like in the 80%. I don't know how high it got.
90. It got to 90 for a little while.
90. Yeah, I think, was it last week? It was at 70%. We're like, that's really weakening. And then now
it was going down.
Like, yeah, it's going down, and now we're back to flat. So the idea is that the market has unchecked that box for the rate cut in December. Obviously, there's still some time between now and December 10th, but and we have some delayed reports coming out. Although I don't know how much a delayed report's going to affect the Fed.
But as you get closer to that date, these numbers get more concrete, kind of thing.
But the idea is that what's that going to do? It's going to shift all those boxes. As those boxes shift right,
shifting right,
rates go up.
Mortgage rates go up. Remember what I told you guys? Okay, you got to follow these blue shades. Follow the blue shades as these move right. Or these numbers go down, okay? Mortgage rates up. And there's no move. Fed didn't do anything. This is just the market pricing in. Pricing in happens all the time. Every minute of every hour of every day. Pricing in happens. And it changes as the world changes. If these all go to the left, right, and these percentages go up, then mortgage rates go down. So what happened was, what you guys need to know is that the next meeting, this has changed. And we try to tell you guys on Macro Monday, we weren't even sure that we were going to have this December cut. Now, 57% chance, no cut. As John said, this could change, but that's what the market's doing. So that means mortgage rates up. And when I go to mortgage rates, take a look at that. Look at that bad boy right there. Look at that. Jumbos.
Yeah. That light blue spike is the jumbos, and they are sort of like the canary in the coal mine for the overall mortgage rate. So you can see that they typically spikes in the jumbo tend to precede what's happening in the conforming. I like it when they spike down and they cross below the 30-year, because that kind of tells us that the conforming rate, that kind of tells us we'll see a downtrend. Here. Right now they're spiking up. Now they are very spiky. That could easily spike back down, but really it's telling me that you can expect mortgage action to basically go sideways and start creeping up, especially as we enter or get closer rather to December.
Yeah. And I wonder if that is what buoyed, is that the right word? Buoyed deal activity. I'll tell you, deal activity outside of our market is up too, right? Mortgage purchase activity is up. General demand is up across the country. It's not just us seeing this pickup in demand. And we're asking, like, why is this happening? Well, maybe it was rates. Maybe everyone was coming in for rates. I don't know. We're not a rates town. I don't know. Maybe it's the election's over, uncertainty's down. I don't know. We don't know. But rates are going up. Okay, guys. So December meeting, no cut. Now look at this, guys. This is where it gets interesting. Let me take these out. Look at the January 28th meeting. There's a cut. But it's 48%. Guys, if it's under 50%, that's less than a coin flip. You don't want to, jeopardize your reputation. There's 35% chance of still another no cut. And I have a feeling that we may not even get a cut in January either. So all these cuts are being priced out right now. and that means mortgage rates are correcting upwards. We got a question here, John?
No, just Kara writes in that she says that the New York City market is still very uneven, that some properties are busy while others are painfully slow. Yeah, it's very much like lily pad behavior. You have these pockets of just intense activity, and then in between is just like quagmire of nothing.
Yeah, it is. It's a very fickle market, very, very disparate. It's tough. It's a challenging market. This is why you need brokers in this market. Good brokers.
Sure.
This is what the Fed is dealing with, guys. They're dealing with cracks in the unemployment market, cracks in the labor market, and they're dealing with a little sticky inflation, a little bit above their target, and that's why they're just, which way do we go? They don't know which way to go, and they don't want to cause more pain. So they're, as John says, data dependent. They're very data dependent, and in the meantime, the markets will price in and price out rate cuts for the Fed.
Yeah, this one leans to me like a rate cut chart. But again,
this is a rate cut chart.
This is a rate cut chart, but it's not convincing, right? This is the idea you've been out for 27 weeks or more. It'd obviously be nice if this worked its way down lower, but on its own, this is not enough to trigger a rate cut.
Exactly. So we'll keep an eye on that, guys. But that's the battle of what's going on. And sometimes when you don't know what to do or you have conflicting things, you do nothing at all. And it looks like the bond market's starting to price in that scenario a little bit. Talking about the housing market, again, just we like to go outside our market just for a little bit so we have a general understanding of what's going on, guys. It is not anything like the great financial crisis. I know I mentioned that before, but no, the credit markets are nothing like that. The housing markets are nothing like that. And this chart is basically telling you that sellers have a lot of cushion, a lot of cash cushion out there. Take a look at the bottom, that bottom red right there. And that's less than 60% loan to value.
Yeah, no, this is obviously a national conversation. We're talking about the national market. And I've seen some headlines of late, the last few weeks, talking about how there's been a spike in foreclosures and all. And it's like, you get the sense that there's a bit of an idea that the housing market's starting to come undone. And I think it's a lot of emotional headline grabbing attention, because when you zoom out like this, right, foreclosures still pretty low. This housing market, if you're in a home, it's pretty strong, and you've got a huge cushion of equity, unlike most people have had in the last 20, 30 years. Like the amount of equity is quite nice, and it's
it's different.
That will hopefully cushion this consumer going forward.
It probably will. It's going to be very, very different. This cycle, the shape and form of this housing cycle, whatever, it's going to look very, very different. And we've been in it for a while. We've been in this volume slowdown for a while. The national market has been in this volume slowdown for a while, but there's not going to be a capitulation. There's not going to be a great financial crisis element to the housing market, I don't think. And meanwhile, like the rental market, the national rental market, just to look, I know the rental market here, Manhattan is kind of doing crazy things, but outside our market, it's going down. National rental market's going down outside of our market. Here's a good chart. Take a look at this, guys. Look at the red and the orange, red and orange, yellow. I don't know what that is. Orange, yellow. The two lines. Look at the two lines, not the bars. The two lines. Those owner's equivalent rent the primary residence. They both are in the CPI. Both are big portions of what the government uses to track inflation. And we talked about this.
This is a rate on hold cut. So if you have inflation going down, they don't need to fight it by kicking up rates. You can keep rates on hold. So the data really is not.
Could be a rate cut chart also down the road.
Perhaps, but I mean the slices that we're looking at, none of them are really indicative of one or the other, and they're all over the place in terms of what rates should be doing and what the Fed should be doing. So there's really the sense I'm getting is there's a lack of solid direction here.
Yeah, who the hell knows? Right? Good time to be humble about the market right now. I don't even know if the Fed knows what they're going to do. And there's probably a lot of dissent going on right now in that Fed. You can only imagine what's happening there behind closed doors. So this is going to be a negative on future CPI and inflation. It's going to drag it down. It's going to drag it down. So you got these conflicting things, guys. This is the mechanics of what's going on in the macro market. How does it impact us? Well, we just had one of our best volume periods. This is October, right, John? This last bar?
The last bar is October. Yeah. That's like you stack those up, and that's the total dollar volume in terms of the contract signed that we saw in October, and it's the best one. You'd have
Such
to
a
go
great
back to
chart.
what? Right before rates started spiking in April of 2022.
Yeah, look at that,
Pretty
guys. I
good.
mean, there's a lot of listings going into contract and a lot of pricey listings going into contract. Where is it for November? Did you happen to check how November was faring?
Yeah, we're a little bit below trend for November. I think we're like 2.4 or so. I think right now for November, this is like a 2.8.
Okay, so up to
I
like
believe
this
that
level
sun
here,
is,
kind of. Okay,
right in there.
2 good months though. 2 good months,
Yeah.
a lot of deal. I mean, are you guys feeling this? Are you guys feeling a little bit of an uptick in the last month? I would love to hear from you guys. Not just Kara. I know Kara's talking, and Karen, but I'd love to hear
Yeah, I
from
think
you
that
guys what
the
you're
real
seeing.
key is, but you look, you kind of want to get a sense for how much each of these little colored bars has grown from a year ago or from the last month, and you can see that like the under $1 million one, it's it's okay, it's certainly up from last month, but it's not
Yeah,
really setting new records here. The 1 to
look at the
2
over
million
4
market,
million.
that blue one, okay, all right, that's a decent month. Green one, so far, but that purple bar, right, that luxury bar that's a big one. And that's really been the story of this market over the last several years. It's just this luxury market has been powering this market higher.
We got a couple of yes to an upticks. We're getting some people confirming. It's probably feel.
I
I mean,
like
you
yes
probably.
to uptake.
Yeah, I mean, you guys are boots in the ground, right? We got to wait a couple of weeks for those deals to hit our desk and then calculate that in a contract signed state element. But you guys are dealing with all. Thank you, Nikki. We always love a little Nikki here to share her wisdom. Yeah, like take advantage of it while you can. This is Brooklyn's not seeing it like Manhattan's seeing it. It's just the weirdest thing because I hear Brooklyn, John, and everyone I talk to in Brooklyn's like, it's crazy. But then I look at the data and it just doesn't confirm it.
Well, I mean, and that's exactly what Kara's talking about, is that you have these pockets of
Yeah.
intense activity, and then there'll be other pockets where it's just absolute crickets. And I think that's what the data is showing you in Brooklyn. It's just still a very muddled picture when you look at that overall contract volume. It's nowhere near where it was in 22. It's not even back to where it was last year or like the year before. It's just sort of, and that's kind of the problem with Brooklyn lately. I don't know if it's a rates thing. I hesitate. I don't even want to say it's a Brooklyn thing, but something's going on in Brooklyn.
Karen says I put 2 under contract and sub 2 million price in Park City. Both buyers are financing. This has surprised me, but could be people end of year. Just need to move assets. End of year. We got some good comments going on here. I think there is an uptick, but it absolutely depends on the property. That's what it's all about, right? Ooh, it's so episodic in this market. That's a good word, Nikki. It's like the word of the day. Episodic right there. Yeah, it's like bipolar. Good over here, tough over there. I don't know. What?
Sorry, I just had this memory. We used to play this game. It was in like, I think, a history class in college, where someone would write some random word on the board when you walk in, and you had to use that word in an answer to a question.
Was episodic one of the words?
No, but it would be like that. Someone write episodic, so you had to figure out how to get that in your answer.
Okay.
We should recycle that out. It was a fun game.
Yeah, we should. All right, guys. Should I give you a quick synopsis of what we're talking about today here? Just a quick summary, a quick wrap up, right? Generally speaking, supply is coming in a little light. I think it's going to end lighter than normal. Deal activity is above. It's above trend. This is the second consecutive month. We're doing good. Actually, this is the third. This would be the third consecutive month. We already had 2. So keep an eye on that. 850 is our target. We're above that. Credit spreads are widening, but not to the point of concern. If I go 1 year out, you can see where we're at. So yes, it's going up, not to a point of concern. Fed, this is like the biggest news I think you guys need to take away, is that the market has now priced out a December rate cut. And in the process of pricing out a December rate cut, rates go up. Okay, and that's exactly what's going on over here. I don't want to go over all the national housing charts right now. It's still a battle of the labor markets and sticky inflation. Basically all you need to know. There's some slowdown sectors, ISM, labor market, and then you got inflation and the Fed. Who knows what they're going to do? Okay. Manhattan seeing a nice bump. Brooklyn seeing a bump. Not as nice.
No, not as nice. So here are my thoughts. That's a great summation. That was really, I'll give you credit for that. I like that. My thoughts on the fall market that I was alluding to earlier. So I'm just talking about Manhattan right now because I think it's the one seeing the most activity. I feel like with rates going up, I think we might start to see a faster decrease than we'd like to in the, sub 4 million, especially the sub 2 million more financing sensitive segment. However, I think we're really setting ourselves up for an interesting spring season, because we talked about all these macro charts. We talked about, what the S&P is doing and the consumer discretionary, and, crypto's down. All of that leads to volatility, which really is good for banks and trading desks, and that is going to power a lot of comp. We're going to see some record bonus years. So I think the fact that this market is sort of heading up right now, even if it comes to an abrupt end or comes to a little bit of an earlier close, especially for the under 2 million segment, I think we might be setting ourselves up for a really interesting spring season. The question is, I'll put in a plug for our advisor service. Look, you gotta price it right, but I get the sense that we might see another push higher in terms of dollar volume in the spring. So it's a long way away, but I'm cautiously optimistic.
Well, expect the unexpected. That's for sure, because I certainly didn't expect this pickup in activity. I don't know what it's from, if from rates or something else, but I thought the election would kind of suppress us a little. It didn't. So expect the unexpected. Let's just keep an open mind, and we have tools that we could track all this stuff. And I think you're right. I think the spring is going to actually, it's got some green shoots now that might portend a decent spring market, and we'll be all over it, guys. We're going to analyze this together. We'll know everything we need to talk about clients in terms of the data. Kara, here you go. Brooklyn ticker. Okay, that's that. Take a look. I don't know what the normal is. I haven't researched what the norms are, so I don't know for benchmark purposes. That apologies. And somebody asked me, I think it was Nikki, asked me for Brooklyn monthly dollar price point by contract activity. There you go. That is the chart. You could screenshot that, guys. That's it. That's all we got, guys. It's gonna be an interesting market. Take advantage of this market. We got a couple more weeks till Thanksgiving. Tomorrow, if you're around 11 o'clock, join us. We'd love to have you. We're going to talk about designing the perfect CMA report. It's always a good conversation. And outside of that, we're going to probably wind down a little bit content. I got a couple of webinars I'm going to try to pull out, but that's really it.
I have to share this because I have to share. I got to say, Kara, thank you. I'll plug you. I use your advisor server on 2 properties. It's very helpful. Got to say,
Love Kara.
Thank you very much. This show is brought to you by UrbanDigs Advisor. It's definitely, hard to believe Thanksgiving is really for. I know.
It's great. I had 7 turkeys fly in my backyard yesterday. Is that like a thing? I have a video of it. 7 turkeys, big turkeys, flying right here.
Wild turkeys. Yeah.
Wild turkeys. Yeah. I'm like, this is not a good time to be coming around. All right. Thank you guys very much. I'm just messing around. John Walkup, thank you very much. I am Noah Rosenblatt. We are both with UrbanDigs. This has been Macro Monday. Catch you guys next time. Cheers, everybody. Omen.